The person says, "Hi, Owen and Kate. I'm new to share investing. I've only got $500 in one company at the moment, and I have an account with Sharesies. I'm starting to find out more about other trading platforms, and it seems like there are two broad types: the traditional bank platforms like NabTrade and CommSec, and there's newer, cooler platforms targeted at beginner investors like Sharesies, Spaceship, Superhero, etc. If I wanted to take investing more seriously, do I need to, in quotes, graduate from these beginner platforms? What are the benefits of going to the more traditional platforms, i.e. the bank platforms? What are the risks/pitfalls I should look out for when moving between platforms?" Kate, go for it.
Yeah. So the first thing, I thought we should just differentiate between micro investing apps, so Raise, Spaceship, as they mentioned, because that's more of you can choose which portfolio, but you can't buy and sell individual shares and ETFs, and this means you can just put $5 in. So that's kind of one thing, and we've got an episode on that. I probably wouldn't call them brokerage platforms. They're more of a managed style investment. Then we've got the more modern platforms, so Perla, Sharesies, Superhero, Stake, Self-Wealth, where they are a brokerage platform. Some you get your own hold identification number, some have cheaper brokerage, but a custodial based model. Again, we have an episode. So that is real investing. That is a brokerage platform where you can buy and sell whatever shares and ETFs you want. You can invest for the long time on that. And then, as you mentioned, you've got the more traditional brokerage platforms, which do a very similar thing to the Perla and Self-Wealth and Sharesies, but they're just they've been going for a long time, like NabTrade and CommSec, and they have quite a few other features and things there.
Yep. So do you need to graduate from, if you're using Sharesies or you're using, I don't know, maybe not Stake, maybe like Superhero, do you need to graduate to one of these other platforms?
I don't think anymore. Unless there's particular features or like there's some tools and things you can't access on something like Perla or Sharesies, that CommSec and NabTrade as really established platforms can offer you. I mean, as we've mentioned before, you can create a free account and just check CommSec or NabTrade out if you want to have a look. But I think there's more of a graduation almost from the micro investing, where you have it might be how you get used to investing, but then you get to a point where you feel comfortable enough to buy your own ETFs and shares, and you go, hey, I'll use Perla or I'll use CommSec. But I don't think between the more modern brokerage platforms and your traditional CommSecs, I don't think you have to graduate anymore. I think they both fulfill what most investors would require.
Yeah, I agree. So is it easy if you wanted to switch across?
For something like those micro investing apps, you can't, because you're in a managed account, you can't really move the portfolio. So that might be more the graduation style. But between Perla, which is CHESS sponsored, you get your own holder identification number, and CommSec, you would be able to move your holdings through some of the platforms. It's more of an automated process, and sometimes you have to fill in a form and pay a few fees, but you can, in a few weeks, move across your holdings from one platform to another. So that is possible. And there's just some fees involved. So it's not something you would just go, oh, I'll just move here one day, move back the next.
Yeah. And I think that from where I sit, I think that's really important. So you don't want to constantly be changing. I think the key, we've talked about this in a lot of other episodes, right? Where we've talked about micro investing. We had actually Raise on the show before. We've spoken to Sharesies before. We've spoken to a lot of these industry experts. So you should go and check out those episodes. We also did one on different brokerage accounts and HINs recently, right?
Yeah. That was a two-parter. So if you go back 2 months scrolling through the episodes, you'll be able to find that. And yeah, I don't think there's too many pitfalls when moving between platforms. I just wouldn't. It is a bit more effort. There are some fees, and I wouldn't do it without having a real think through. And just keep your life simple. It's good not to have one ETF on one platform, one ETF on another platform. Oh, I've got a share on this platform. That makes your life a bit more complicated. You have to collect more statements at tax time. You have to make sure your details are correct on multiple platforms. So test out a couple of brokerage platforms. And once you're comfortable using one, especially when you're getting started, I just kind of stick with one platform at the beginning.
Yeah, I think that's really good feedback there. So don't feel like you necessarily have to graduate. We've talked before that you can have multiple accounts, and you can kind of, do what works for you. Simple is beautiful. Simple is amazing. Keep it simple, because if you keep your investing simple, it means things like tax is simple. It means things like reporting, all of your results and dealing with situations is simple. It's like power laws. The more complex you make one little thing, the next thing is 10 times more complex. So just keep it simple the whole time.